Thank you very much. So Blaine is connected now, correct?
He's connecting right now.
connecting.
So
Good afternoon, ladies and gentlemen. Welcome to our Investor-investee dialogue panel. So today we are very excited to have our Cyberport Macro Fund first digital asset play, Hex Trust, with us, together with the investor QBN. So let us welcome Alessio and Philea. May I invite you guys to give a brief intro to our audience?
Thank you. Philea Chim from QBN Capital, and QBN Capital is a Hong Kong-based tech-focused VC fund. Our anchor investor is the Six Chong's family, and our managing partner, Frank Tong, who's in the audience as well, was the ex-CEO of S3. So we invest in companies like Alexio's, like startups, tech-focused, and we nurture them to become very successful, hopefully one day.
Thank you so much. My name is Alessio Quaglini, CEO and co-founder of Hex Trust. We are a digital asset infrastructure company. We operate out of Hong Kong, Singapore, and Ho Chi Minh City. And we've been in business for around 4 years. We went through two programs by Cyberport, which actually proved to be quite successful. Also, thanks to the investors that led our Series A round some months ago.
Great. So let's talk about the macro environment first. We understand that the DeFi adoption is actually growing at different pace in different parts of the world. So like which area within DeFi do you think has the highest potential, and which country is actually leading the ways? And finally, like what role do you think Hong Kong can play within like DeFi?
Is that? Yeah.
Ladies first.
Thank you. I think from what I've heard in the market, but obviously Alessio is much more an expert than I am, DeFi is becoming something very interesting. And I think lending, so lending, individuals lending, personal lending between people in the crypto world, it's something that's only just started and still has a huge potential to grow in years to come. And then maybe next one will be DeFi lending for businesses, small businesses.
I think, well, exactly. DeFi has actually been one of the first real killer app for blockchain technology. And in what we've experienced in the last 2 years is really amazing, right? The growth of DeFi protocols and the adoption of DeFi protocols has been something that nobody would have actually imagined a couple of years ago. Now, in terms of the different paces, I think you were mentioning different geographical areas. I would, what I would talk about, obviously you have different paces in different geographical areas, but what I would kind of highlight is that we're seeing two types of countries that actually have a very quick adoption of DeFi and DeFi protocols. On one side, we have those countries that have very well developed capital, they're very well developed from a capital markets perspective, which means that you have institutional investors that are used to, that try to get the best out of the market, right? They try to exploit inefficiency in the market, arbitrage opportunities, etc. So when they're put in front of DeFi protocols that can provide efficiencies for the usage of capital, they try to leverage this type of platforms. And so we're talking about obviously the United States, the UK, Hong Kong, Singapore, etc. On the other side of the spectrum, we're seeing quite a significant level of adoption in developing countries that have very young population, that have populations that are very tech savvy, with very good penetration of mobile phones and other types of technologies.
And with I believe with a huge unbanked population as well, right?
Exactly. So in that case, we have kind of the opposite effect. So instead of the developed capital markets, we're seeing this kind of populations using DeFi protocols to basically bypass the traditional financial system and kind of solve the problem of unbanking that we have in these countries.
Mm-hmm. Yeah, and I think some of the countries that people don't really trust their own currencies. So those countries are more likely to adopt or be at the forefront of this adoption journey. And like Hong Kong, I think is probably the former of the two categories, with lots of capital, very forward-thinking investors here that are participating.
And moving on to another universe of the digital asset space. So obviously NFT and also metaverse is actually very popular lately, with Facebook changing name to Meta last week. So do you think like it is a fate, or is it for here to stay from your perspective?
I think the hype and the crazy prices in NFT right now is not sustainable. But NFT as a technology, as a tool, to prove that the item is unique and one and the only one, it's very valuable and it has a long-term potential. So for example, one day it can be used in digital identity, for example. The information on my ID card currently can be tokenized. And then when I submit whatever form that I'm now filling into the government or to like applying for a school position or whatever, you can just submit your token. So it will be very secure and very simple in the processing. Everything is tracked, and then the token, you can prove that it's unique and that's me, and all my identity, my information, date of birth, everything is authenticated. So I think it has big potential, not just in the current hype and short-term market.
Let me allow me to disagree a little bit on this. Now,
Interesting.
at least,
I like it.
now what I want to say is that yes, obviously there's a hype right now, and I mean, if you had a look at the market today, what happened, for example, in the Sandbox project, with prices going up by 100-200% in the last 2 days, obviously there is a hype. But what I think is that NFTs are really the second killer app. If we talked about the DeFi world as the first killer app, NFTs are really the second killer app for blockchain. And GameFi, so the decentralized online gaming, is proving to be the fastest stream of adoption for blockchain. What we are seeing now is really we're just scratching the surface, and we are realizing that a new type of ownership of assets and data can be achieved online, right? And as we see more and more people actually living their lives online, this will increasingly have a lot of value for the protocols that sustain this kind of decentralized metaverse economy. And now that there will be a little bit more complications down the line, where we see companies like Facebook entering the space with Meta, and on the other side, companies that took a completely different approach on the decentralized side. So Facebook is proposing a centralized kind of metaverse solution, and on the other side, we have the blockchain maximalists that are proposing a completely decentralized solution. So I have to be more, as a blockchain company, I have to be more on the latter side of the spectrum. But regardless, I really think that we are in front of a revolution of how we see data, how we see digital ownership, how we see the programmability of your digital ownership online. And for us, it's been a no-brainer. I think we were probably the first custodian in the world to support NFTs. And we've invested so far a lot of resources in actually developing a framework to support this type of new economy.
And may I add one more point about NFT adoption? Like, do you think with like GameFi, the adoption would actually be faster than DeFi, given kind of like the vested interest parties are not as many in the GameFi world versus the DeFi world?
To be honest, I don't have the numbers in front of me, but in absolute numbers, I'm not sure. What I can say is that we're probably the phase that we are right now in GameFi is similar to what we've seen in the cryptocurrency space 5 years ago. So you have the first wave of retail adoption, and then what we're seeing is kind of the same trend, where institutions are actually getting into the NFTs and GameFi space. And when this happens, then we will see this kind of exponential growth that we've experienced in the cryptocurrency and DeFi space.
Interesting. So let's bring us back to the relationship between the investor and investee here. So I'm just curious, what do you think are the success formula that works for the chemistry between investor and investee? For example, like other than like financial return, like what do you think would work between like this relationship?
Why don't you go first this time?
Sure. Even if I disagreed, we'll still get along. So I would say three things, right? So the first thing is that if we compare kind of cryptocurrency investments to equity investments, right? Equity investment is really kind of a marriage. So the two parties have to get together and understand that it's going to be a relationship that will have to last for a number of years. So they have to be prepared and start the relationship on that basis. There's not going to be something that will end very soon. Yeah. So this kind of, if we think about the relationship from this perspective, kind of, I think we will, the choices that we make down the line will be a little bit different, right? For example, respect, transparency, and all of these things that we appreciate in marriages. And the second thing is the network, right? So especially in today's world where we companies, startups can access the global, the whole global market. Network has become very important, right? Few startups get good funding, and the startups that are able to get good funding are the ones that actually have very good connectivity. And the connectivity, at the beginning at least, come from your investors. So opening the doors to the network, putting your face, your reputation on the line to support your startup is something that is very important for any investee company. And also the other way around, because actually the investee can become a deal flow maker for the investor. The last point, still, maybe I'm going back to the relationship side. I would talk about the way you see the relationship, right? So you mentioned it's not just a financial transaction, but we actually tend to forget this aspect of the kind of the whole process that we live together, right? So if we think about the investment as a financial transaction, then everybody will always try to take advantage or kind of negotiate and make it harder for the other party to actually be successful. Well, at the end of the day, what we're trying to do is to actually maximize the value of the company. And this will only happen if we see the relationship between the investor and the investee as a partnership. So working together with the same objective, which is to maximize the value of the company.
Just like marriage, right?
Just like marriage.
I was going to say it's kind of like a love-hate relationship, right? Yes, I think a lot of the time investors and investees think they're on different sides of the table when they negotiate a deal. And then when the investors try to get the best terms and the investee tries to get the most protection for themselves, it becomes quite a tension. But I think if there is an element of pragmatism, trust, respect, transparency, the relationship goes a lot smoother. And I often bear in mind it's not just transactional, because in transactional relationships, it's one-off. You don't see each other again. But here, we probably have to see each other for a few years at least until they exit, until we exit. So again, like what Alessio said, it's a partnership, right? So if they succeed, we succeed. We make money, they make money. So it's really about the growth of the company, what's best for the company, rather than individuals' interest.
So Philea, how did you come across Hex Trust? And like, what did you look for when you evaluate this opportunity?
This one, it's got a bit of hiccup, so interesting. First time, I think it was Sam, your back then BD person, approached me. I think he's a Brit, and then I was based in London at the time. So he approached me about this company, and I was like, oh, custody, crypto, okay, there are plenty of them everywhere. So we looked at it for a little bit, and then we said, no, next time maybe. And then after a few months, we ourselves in QBN, within QBN, started to look at crypto as a field. And then we started to speak to people, try to educate ourselves. And then they came back. And then they came back, and this time, okay, they really have something. So they educated us, actually. So kind of go back to the relationship point. It's interaction. It's an interaction. We learned a lot from the industry. We learned a lot about the ecosystem, about what's happening in the latest crypto or startup world. So yeah, and then we started doing all the due diligence. And what really made the difference for us, I think, is the opinion and the references from their customers, potential customers, and the partners. So when the SIA or the IBM say they are the most secure, they are the best company that we will work with, that makes a huge difference to us in our due diligence.
So is this, may I add, is this like a financial investment, or like, do you expect any synergies with other portfolio companies of yours?
Yeah, definitely, lots of synergies. So since our investment in the first two digital assets companies, we started exploring a lot more in this field. And now we've grown our digital assets company portfolio to about 6 or 7 now. And all of them, I think, they play different roles in the ecosystem. Some are exchanges, Hex Trust is a custody player, and then they all play different functions, and there are lots of synergies. For example, I was introducing a company that's looking to use the privacy-preserving method to do checks for DeFi lending. And then Alessio is looking to move into DeFi lending as well, because they've got all these custodian for the currencies and tokens. So yeah, there are plenty of synergies, and I try to make our companies work together, help each other, and learn from each other.
Great. So Alessio, congrats to the closing of your recent round. So would you share with our startup like your fundraising like lesson, particularly like what you would do if you experience setback or difficulties, or like how do you like change your pitch due to like, let's say, market changes? Let's say COVID, or like given the market suddenly got very hot, like how do you shape your pitch in response to market changes?
Well, I think this is the hardest question for an entrepreneur, because obviously the fundraising part can be sometimes very easy and sometimes can be very hard, right? I think there are always many companies doing the same thing, so you're never the only one in that market, right? And then there is a kind of traction that you have to keep into consideration. So the stage at which you are. So if you are at an initial stage, you're much more likely to get investment from somebody that is in your same community. For example, at the beginning, QBN being based here in Hong Kong, having a lot of connectivity with different parts, for example, Cyberport, etc., and providing good feedbacks about the level of business that we had developed in this area of the world, I think was a point of advantage in their evaluation. So the traction, the stage at which you are, makes a big difference. And then there is timing. Timing is actually plays a very big role in the funding of your startup. So you always have to budget for a much longer time in your runway, because, for example, we were planning to do our Series A. Actually, we already had a term sheet and a lead investor back in March 2020, but then COVID hit and made everything much more complicated. Right, so we had to extend our runway, not because we didn't have enough traction or the business was not growing the way we wanted. It's just, the timing was wrong. Then when we hit the market again, then the market was heating up, and after a little bit of negotiation, we were able to close the Series A. After closing the Series A, the market was so hot, and everybody was looking for digital asset infrastructure companies. It was 10 times easier to close the next round. Right, so the only thing I would say is that you have to be very patient. You have to be able to take a lot of no's. You have to be able to reshape your pitch depending on what is the expectation in the market. You have to be able to answer some basic questions about how you different from the competition, right? Or how are you going to use your money? And then you have to have enough runway to be able to actually survive much longer than you would expect.
Can I just add one point? Perseverance. So sometimes it's related to timing. It's not anything when you get a no, it's not anything wrong with the company. Sometimes it's just like our case. We weren't ready. And when they came back, they educated us and then we became ready. So sometimes don't get too discouraged when you get no's. There are plenty of no's but there are so many investors as well, so.
And then Philea, may I know, let's say like how did your capital deployment change like this year compared to last year? Like did you actually speed up your investment like kind of like post-COVID?
So we got, so initially in the first maybe 2-3 months of COVID, things were a little bit quiet. And then when everyone got used to doing Zoom meetings and all of that, it's just back to normal. We didn't really see any slowdown of companies trying to raise money. And we didn't change our pace either. So last year or this year, we sort of kept the same pace and we invested about 20 companies in the last 18 months. So yeah, and we do plan to continue commit to deploying money in the next 2 years at the same pace.
So Alessio, last question to you. So with a growing investor base, how do you manage investors' expectation?
Sorry, can you repeat?
Like with an increasing number of investor base, how do you manage the expectation? And also, like how do you plan to create value with this extra funding in your pocket right now?
So I think from our perspective, we passed the stage from, I would say, from a real startup, right, to a company that is more organized and have different departments doing different things. So right now we are really in the phase where we have to grow as fast as possible. So we have the money in the bank accounts. The market is huge. It's growing at a very fast pace. So every investor behind us really expects us to scale. Mm-hmm. And to scale, there are different things that need to be done. Mm-hmm. But the first thing is the team. Mm-hmm. First, find the right people and reevaluate the people that you have. Because the people that you had in the previous phase might not be the right people for the next phase. Yep. This is something that can be harsh, but it's true, right? The people that are successful in a 10-people startup might not be the people that are able to handle 25 staff kind of teams. So that's what we're doing right now.
Great. Thank you so much, Philea and Alessio, for sharing their insight with us today. Thanks.
Thanks
for having us.
Thank you, Joyce. And our speakers, please stand up and we'll have a photo together. Please look at our photographer in the center for a good photo. Thank you. So Joyce, please remain seated, and Alessio and Philea, please kindly return back to the seats at the audience sessions. Please kindly put it on the, yes, thank you very much. Thank you. So now let's welcome the next pair of the speakers. So let's put our hand together and welcome Mr. Aaron Lee, founder of Dash Living. Welcome. And also we will have Mr. Damien Wu, Director of Business Transformation and Innovation, China Cam Group. Welcome. Please kindly take the seats. So now, Joyce, the stage is now yours. Thank you.
Great. Good afternoon. This session, I'm very happy to bring successful matchmaking by Cyberport Macro Fund, China Cam and Dash Living with us today. First, may I introduce Darren and also Damien. So would you give us a brief background about yourself?
Sure. Yeah, thank you for the opportunity to share. Thank you for, obviously, Cyberport for supporting us always, right? Damien for the investment, Cyberport as well. Yeah, Dash Living, we're a technology-enabled rental solution startup, right? Essentially what we're doing is co-living. Our mission is to empower living in connected cities. So for the customer side, we're basically offering all-inclusive rental solutions, for a lower price. For landlords, what we're doing is we're adding value to their property by increasing their operating profits, right, lowering their operating costs, right, through technology, right. So that's basically what Dash does.
And Damien?
Hi, I'm Damien Wu from Chinacam. So Chinacam, as you might know, is one of the largest unlisted developers in Hong Kong. And my division is called Business Transformation and Innovation, and I'm the director of the division. And the mandate for my division is actually twofold. One is to leverage technology to improve the competitiveness of our existing businesses. And then the second, probably the more important one, is actually to look for new business models and revenue stream for the company. So we're very happy to be able to invest into Dash.
Great, thanks. So let's talk about the macro environment. So what characteristics of co-living that make like Hong Kong a good like product market mix?
Okay, so co-living, unlike other business models, right? Co-living touches living, right, which is a necessity, right? Unlike many other business models that involve the sharing economy, which might not necessarily be a necessity, right? So that's a very strong characteristic of our business model. It's the center ground of it's the center ground of your lifestyle, basically, right? We're touching the rental piece of that, right? Very interesting. Why is it special to Hong Kong? Is Hong Kong is one of the most expensive cities in the world, right? It's actually also the first city that we launched. Right? We're currently actually in 4 cities, right? We're in Hong Kong, we're in Singapore, we're in Sydney, we're in Tokyo as well. But Hong Kong is interesting in a way that the gap between real estate prices and your income is very big, right? It's very expensive place to live. So by solving this problem, actually we're actually empowering millennials to live here, right? To work here, right? To do other things, right? So it's the first problem that everyone has to solve, right? It's the interesting thing about co-living being in Hong Kong, right? In that sense.
Damien?
Yeah, I guess for us, I guess everyone would agree that Hong Kong has a housing problem. And I remember last week when we had a meeting, I actually threw that $1 million question to Aaron. What else can we do to help solve Hong Kong's housing problem? And actually, that's what we have in our mind every day as a responsible developer. So I guess different people would have different solutions to this problem. And I think at the end of the day, we probably need all of the different solutions. But we believe that co-living is probably one of the solutions. And to us, I guess the benefit of co-living is that it kind of optimizes the utilization of common space. And that would obviously then optimize the land use. And then the other thing is, I guess there will be more solutions going forward, and we just need to keep exploring. So co-living obviously is one of the things that we want to start explore.
So some people actually say like COVID actually makes co-living not like as sustainable, like given social distancing. So like what do you like, but so far we have seen that it's quite resilient, right? In terms of like the operation of your company, right? So like what makes it work?
Yeah, I can't exactly say co-living as a whole is always going to be, you can't say that. But I think during COVID, a lot of sharing economy kind of business, some have thrived, some have not thrived. You see work from home, you see eat from home, gym from home, everything from home, what it is, right? Yes. All of those things in common is the from home, right? Why is that? Because actually I'm saying again, right, living is, we're the base of everything, right? We're a very resilient business where we're solving a necessity, right? It's a problem that everyone has to solve, right? It's a little bit different from, let's say, short stay, right? Short stay, if you look at it, even though we're both talking about living, it's not a necessity. But with co-living, we're talking about long stay, right? It becomes a necessity, right? Yeah, so I mean, it's resilient in the sense that we're serving a necessity, but not to say that there's not other kind of success factors actually very important, right, during the COVID times, right? For example, we developed our centralized operations in Philippines during COVID, right, which is much lower cost, and we're sharing operations across 4 countries, right? That's something that we created during COVID. We started signing management agreements, right, instead of leases, right, with landlords. That actually is more of an alignment of interest, right, with our owners. We started doing that. We became more asset light in the sense that we created tenant organized events. Right? I mean, we used to organize events, we still do, but actually co-living is about an ecosystem where we provide a platform for everyone to make their contribution to it, which is in the form of events. It can be in the form of perks, right, with our brand partners. Right? We create that platform, right? So these are things that we do quite differently, right, from other players around the world.
Damien, anything to add?
Oh, I guess Aaron knows it much better than I do in terms of like resilience of the industry. And however, I would say that even if co-living, the business model, wasn't as resilient before, COVID has certainly made co-living, as well as many other different business models, more resilient. So, I mean, during COVID, you learn to do hygiene better, you learn to manage your facilities better, you even learn to optimize your tenant mix better. So at the end, I guess it is now much more resilient.
So going to the micro level, what do you think are the success factors for the chemistry that work between investor and investee on top of like financial return? So what other success factors is important?
Okay, I'll speak as a investor, but actually personally, I have done 3 startups myself before joining the corporate world. So I've actually been on kind of both sides of the table too. Resources, connections, etc. Obviously, that's something that we as investor can add, put to the table. And in this case, I guess Chinacam, for example, we're now exploring to do co-living in some of our Chinacam portfolio buildings as pilots. And if that works out well, then we'd would like to also deepen the relationship and probably go out together, look for properties and expand business, and etc. So I think that's all good. But having said that, I mean, most developers in town also have access to all these resources. However, I would suspect that probably not every developer or every everyone with a deep pocket would make a good startup investor. That actually needs, as you pointed out, chemistry. And having been on both sides of the table, I would say that, especially for the challenge for corporate investors, as opposed to like just financial investors, is that traditionally corporates have these red tapes, bureaucracies, etc. So the culture is very different. And in order for the relationship to work, on our side, challenge actually is to make sure that we do not get in their way. We can, on one hand, we want to help as much as possible, but on the other hand, we definitely don't want to suffocate them. So that would be the challenge. And then I guess in the case of Chinacam, it's interesting that investment is part of this business transformation business unit. So at the same time, I'm also doing actually the corporate transformation myself too. And I think that works quite well for us, is that we're also trying to make our teams learn from our investees. And there's a lot for us to learn. So I think that whole process works very well for us, not just in terms of financial, but also in terms of the culture transformation and everything else.
Aaron, anything to that?
Yeah, to summarize it, I think I agree with a lot of things that Damien said. To summarize it, I think in terms of chemistry, I think it comes down to 3 things, right? 1 and 2 are very similar, actually, right? So of course we have to deliver synergy with the existing businesses that they have, right? Synergy, I think, value. Right, so value is also the other way, right? They're delivering value to us, right? Us to our customers. We delivering value to their organization is value. And last thing, of course, is transparency, right? Which is both positive and negative. We just went through very tough times, obviously, in the last few years. So we share both the positive things that's happening, how our growth is, right, and how we're handling the problems as well, right? So transparency definitely acts as a, I would say, like a lubricant, right, between the investee and investor, right?
Actually, I would like to add to Damien's point. Here at Cyberport, we're actually seeing more and more like kind of corporate innovation team turning into like an investment arm. Although they won't write a check right away, but at least they are finding ways to work with like innovative startup. So this is actually quite an encouraging sign. So Damien, may I know like like when you evaluate this potential opportunity, like what actually did you look for? So obviously it's not just a financial investment, it's like a strategic investment, and it surely has like synergies with other existing businesses of the group, right?
Yeah, definitely. So, well, first of all, thanks to Cyberport, we get to learn about Dash from Johnny, actually. So Cyberport invested, and then John recommended that to us. But initially, we didn't start with investment. Actually, the first visit I made to a Dash property was actually to look at the property to see if we can actually work together on some of our China camp properties. However, after talking to Aaron, then we see the chemistry. I guess every time we look at an investment, I keep saying that it's TMT that we're looking for. So it's technology, market, and team. The first two, well, still important, but they're not as hard to find as a very good team. However, Aaron, being a serial entrepreneur himself and with a very strong team, and he's proven that he's been able to actually not just survive, but actually excel even during the very difficult times of COVID. So that just gave us all the confidence we need to make the investment.
So we actually have a lot of startup founders in the audience online. So like, Aaron, can you actually share with those founders how you managed to expand the company overseas? As you mentioned, you have operations in 4 different countries, and 2 of them you actually expanded to those like Japan and Australia without actually being there, right? So would you share some of the wisdom with other like founders?
Yeah, something to share with other founders. It's very like it's the tough times that you can actually have the opportunity to shine, right? It's not just about surviving, right? If you talk about surviving, actually, just by surviving, and or everyone else dies, right? You by being the last man standing, you win, right? I mean, that's if you look at survival that way, right? But it's not just about survival, right? Like survival obviously is very important, but it's actually the tough times that give you an opportunity to actually outshine the others who actually might have more funding than you, they're in more places than you, they got more muscle than you, right? I mean, it's that opportunity that you get, right? Nothing is impossible, right? There's always a way, there's always an opportunity, right? If during tough times, actually, there's actually more opportunity in a way that because everyone else is suffering, right? To give you an example, I mean, we during the pandemic, right? There's a lot of things that we were forced to tighten up the unit economics, right? If the operating cost is high, then you find somewhere else that actually can do it, right? We launched the Philippines team, I mentioned, right? The management agreements actually was born, right, because of the COVID, right? And because hotels actually were suffering. We can add value during those times, right? We can help the hotels more actually when they're actually having more pain, right? So it's all about value, right? You can add value during the tough times more than actually in the normal times, actually.
So to add to that, would you share more wisdom about like fundraising? As you said, definitely hotel is the biggest hit area, right, during COVID, right? So how do you like alter your pitch to your potential investors given the adverse market changes?
Sure. So as mentioned, I mean, as Damien actually mentioned, right, our first conversation was actually not about investment, right? It's actually all about adding value. So everything we're always thinking about, okay, how can we make ChinaCam a better organization? And the first thing to understand is you have to do your homework before actually meeting Damien, where I actually studied that actually, hey, he's got a lot of actually assets that's actually hotel operating, right? Some are residential. Obviously, they have a huge land bank. You guys have a lot of portfolio, right? So I think about what are the challenges that they're facing, right? So before even talking about investment, where do you add value, right? So that's on the investment side. For customer side, same thing, right? Or if you're talking to a hotel, same thing, right? You have to think about how you can help them, right? You always give before you take, right?
And Damien, would you share with us, like, during this past year versus last year, like, did you actually deploy more capital, like post-COVID? Or you're more willing to deploy any capital in specific vertical?
Well, I guess looking back, the pace of investment didn't change much. I guess initially kind of it slowed down a little bit. and then very quickly everybody just adapt. So the way we do DD, for example, changed quite a bit. But in terms of the pace at the end, looking back, it's probably about the same.
And then, Aaron, would you share with us, let's say, like with a growing investor base, like how do you manage investors' expectations? And also, like with the additional funding in your pocket, like how do you plan to create value to the company and also to your shareholders?
To that first question, again, it's to the third point I was mentioning earlier with chemistry, right? It's about transparency. How do I deliver the most transparency in the most effective way as the cap table grows? Okay, so how we, for example, how we set up our data room is we give everybody a link where they just hit refresh, right? So every month we're uploading new data into it, where it's super transparent, right? They can just press refresh and they see it. Obviously subject to NDA, and we have a lot of kind of organizational how to structure the access, right? But transparency is the number one thing, right? So we should be able to openly discuss the things that aren't working out, as well as obviously the breakthroughs that we have, right? So that's number one, right? To your question, right? How we manage a growing database, right? As well as obviously managing their expectations as well, right? Because they see the ups and downs, and obviously overall we should be growing, right? Asking for help as well when they see actually times when actually we need help, right? And things. The second question, obviously, how we'll be using our proceeds, right? So it's a lot of it is talent, right? A lot of it is investing in technology, right? We are an asset-light business, so we don't. The proceeds is not mandated to own assets, but we're investing into the sharing economy where we're creating a bigger platform, right? For more landlords to be able to join, more tenants to be able to join, right, in an asset-light way, right?
And as a matter of fact, I think like customer stickiness is very important in your business, right? So how do you plan to grow that kind of like, I suppose like you are targeting the millennial or the younger group in the population, right? So how do you plan to grow that?
Yeah, so stickiness is so we measure our renewal rates, right? How many people, when they're scheduled to end their leases, right? In our community, we measure exactly how many people actually renew, what's that percentage of that, how long do they stay with us, right? So how we actually grow our renewal rates is actually the direct metric to increase our renewal rates is engagement. So I'll give you an example, right? So our mobile app actually connects all of the customer service, the mobile key, the tenant engagement with the events, right? The redemption of perks, right? Which we have with our partners, right? In order for this to be scalable, it's actually we have to create a platform for the tenants to be able to organize their events. So this becomes a snowball, right? We got about 2,000-3,000 tenants at once, right? So as if we have, the number triples or quadruples, we shouldn't have triple or quadruple the manpower needed. So this becomes actually an ecosystem where they can all engage with each other, right? So that's just one way, right? But I mean, it's all about understanding the metric, right? Which renewal is important, as you say. What's the closest kind of connection to it, which is engagement. The more engagement you get, the higher, the longer your leases are with, more renewals.
Mm-hmm. So I guess one final question is like, I'll let you to kind of like give us as an investor a request about like how we can actually help you to grow. Like from Cyberport or from China Cam, like what more can we do to help you grow?
Yeah, well, I mean, always open to opportunities. I mean, it's at any given time. I mean, we have different problems that we face. The team is always in position to pivot. We're always in position to, do different things, try different things. But trying different things and moving on to different strategies, right? Actually need a lot of resource, right? And by resource, I'm not talking about financial resource, right? It's actually your network or human, right? Your connection, or what it is, right? That's a general way to answer that question.
Mm-hmm. Damien, one final question for you. Like, would you share with like our startup in the audience, like what type of like startup are you looking into investing, or like just like from business development perspective?
Yeah, I guess as I mentioned earlier, Hong Kong has a very acute housing problem. So as a developer, naturally we'll be looking for new business models that can help solve that problem. So that would be what attracts us. And then in terms of evaluating the team, the three letters TMT, the technology, the market, addressable market, and then more importantly, the team. Those are the three kind of criteria that we'll always evaluate.
Great. Thank you so much, Damien, Aaron, today. Thanks.
Thank you.
Thank you very much.
Thank you, everyone. Thank you.
Thank you, Joyce. Thank you, Aaron, and thank you, Damien. Please please stand up, and then let's take a look at a photographer for a group photo together. Thank you very much for this intriguing sharings. We certainly learned a lot. Thank you very much. So please kindly return back to the seat at the audience stations. Thank you. So here comes to the end of our core program today. So shortly at 5 p.m., which is in a few minutes, the annual Cyberport Entrepreneurship Program Graduation Ceremony 2021 will start next door at the function rooms. So featuring graduates from Cyberport University Partnership Programs, CUPP, Cyberport Creative Macro Fund, CCMF, and also Cyberport Incubation Program, CIP. So feel free to stay and also join the celebration with us. So once again, we're very grateful for your participations and the support of the CVCF's wellness partner, Cigna Hong Kong, our partners and supporting organizations towards CVCF this year. Tomorrow, we'll be hosting a series of startup workshop sessions of various in-depth topics. So remember to be back on the CVCF virtual event platforms again tomorrow morning. So the two CVCF Spotlight events are Adventures Global Business Acceleration Summit and also Silicon Dragon Hong Kong 2021 will also be on tomorrow's program. Remember to join us online. So if you have missed today's Food Flow session, just visit our platform again tomorrow, and the videos of today's sessions will be available on demand also from tomorrow onward. So this platform will open until late November, so where you can take your time to visit our virtual expo, view the startup power pitch, conduct investor matching, and network with other attendees online. So thank you so much for joining us here today, and we hope to see you again tomorrow. Thank you.